Hello, stock traders. I hope all of you are having a fine morning. Well, this has been crazy times in the stock market, and today was a very volatile day on the market. It continues to be very up and down, and it was a crazy Wednesday, as it has been a crazy week so far. When you are viewing this video, it is Thursday morning, and in today's video, I am going to give you some stocks that I use to help me to use as a hedge against the stock market if we should see massive waterfall selling in the market. I'm going to talk about those. I'm also going to talk about how I attacked the market today, the reason for what some of the things that I did. I'm going to explain to you in detail some of the changes that I made in my portfolio and how I got down to 80% cash in my stock portfolio today as I felt uncomfortable. I'm going to tell you what I saw and why I reacted like I did. But before I get going, if you could do me a favor, please hit that most amazing and wonderful like button. Also, if you haven't done so before, please subscribe and turn on those bell notifications so you get notified when a new video comes out. All right, well, let's get into it. Let's start talking about the day and what happened. And this was on Wednesday's market day, and I'm going to kind of talk in detail about what I did. Okay, so this is the 5-minute chart that you're seeing here, and this is going into pre-market here. You can see it was hovering around this 393 level, which was a really key level in the market. Now, I called out to my members in my private Discord about how 397 is support, 397 is resistance and an important level to watch, and that 385 is support. And you can see I have those mapped out here. So we were kind of hanging around at that Mendoza line. If we stayed below 393 for too long, we're most likely going to see a move to 385. If we were above 397, then we could above 393, then we could see a move all the way up to 397. So the stock market ended up started off, just kind of back and forth, a little bit down, and then we got the market open and we got this move up here. Now, once we hit 397, this was resistance, and I felt like that at this point you always want to sell. And so what I did is I went through and I sold every single stock in my portfolio that was a positive gainer at the moment. So I didn't want to sell my losers. I wanted to sell only my gainers, and luckily I had a lot of those with the insider swing play. I had quite a few plays that were positive this morning right at that time. So I sold a lot of stock feeling that the market was going to be coming back down. Also with FOMC minutes coming later in the afternoon, I wanted to be very careful about having too much exposure to the market. Also at this time, with my feeling on the overall market, I do not have a high opinion of the market. I am not really that bullish right now. So I decided to buy some SPXS. Now, SPXS, I'm going to pull it up here, is a Bear 3X fund. And so what I'm looking for on this is when I start something like this, I'm looking for the market to pull back to a certain level, and I will use this as a hedge. So I will also use a stock called SQQQ for the same thing. I will also use another one, which is TZA. The SQQQ is triple the movements up or down. The SQQQ is shorting the triple Qs. So the further the market goes down in QQQ, the more money you make because it's an inverse fund. TZA is the same thing I use. I use this. This goes against the IWM Russell 2000. And you can see as we got to high levels and the market went up, this goes down. So it moves opposite. So as the market started to move down, this became a good move. Now, what I will do is I will trade these as if and like I am working towards a gap. So if you go to the daily chart here, when I started my position right here at resistance, I started a position in SPXS, which is a 3X fund that the further the market goes down, the more money that we make, that it's a positive thing. And so That is one way that I protect my portfolio. So I will invest with insiders, with just like I always do, because I'm always investing in different insider stocks. And if the stock market goes up, I make money that way. If the stock market has a waterfall of selling, then I have less exposure, in that I get 3x coverage that way, and it helps to minimize my losses. And so I'm concerned about that overall in the market. I am concerned about how the market will move. And this is the daily chart. And my target for this, and where I'm thinking the market is going to go, is there are two gaps that have not fully closed yet, and that's at 385. And we have another one down here at 379. And then we have another one right around the 370 range. And so we have some open gaps here to the downside that I'm very concerned about. And today in the FOMC minutes, you can see here, FOMC started right around 2 o'clock. That's 1400. So it started right here. So you could see that we had the movement here, and you could see how the market really jumped and how it really moved. We got a first move up and then a big candle down, and then it started to continue back up again and got past 397. So then I was like, oh, okay, this is interesting. And it got up to 399.45. Then the bears showed up because those meeting minutes were not bullish. There were some investors that got excited because they said that we might curve or look at curving the interest rate hikes later on in the year. I don't call a might. Consider doing that. Any kind of thing that's really that positive at this moment. And I think the Fed has laser focus on pummeling the market to make it to where inflation is kept in check. And so that's what they're trying to do. And they don't really care about where the stock market is going to go. They are going to hit their objective, and whatever happens to the stock market happens to the stock market. I really don't think that they care. So looking at this is not that positive. We got another move down here. Of course, I'm hoping, and I'm usually very bullish on the market. But right now, I think it's important that you consider protecting your portfolio with some of these different things. If you are going to go bullish and go long on different stocks, make sure you do it when the market is at a support level. So as we came back down here, so when the market is at support, you want to be buying. So you want to be buying here, and you want to be selling those positions when you hit resistance, and you need to know what those support and resistance levels are, because they almost act like a magnet. Look at what happened here earlier on in the day as we hit 397. We see that sell back and pull all the way back to support, and then this would have been a great time to buy also again. So anyway, I hope this video helps you. It is how I look at the market, and I like to I think we need to show a lot of caution in the stock market right now. And of course, I wish you all the best on the market. I don't have a lot of insiders right now that I'm very excited about. I'm a little nervous about the market. I'm kind of just waiting and seeing. Now have 80% cash. I am going to start to look at a few things and get in some other things, and I'll have a video on Friday morning with some insider picks again. But I just wanted to, I want to say, be very careful out there and to have a plan. Have a plan when we hit these resistance levels of what you're going to do. Like, for example, entering in SPXS, as I go to my daily chart, my plan is to sell as we get down to 379. So if the market hits 379, I'm out at any time of day on that, because I will feel more bullish that we are going to see a short-term bounce once we hit that lower level, because that is a gap open to the downside. Anyway, hope all of you have a fantastic day on the market. Here's hoping that we get some sort of momentum and maybe a counter trend move, and at some point it becomes bullish in the market again. Looking for those signals, but lots of worries about the economy, lots of worries about recession, lots of things the Fed is not paying attention to. They are just trying to get lower interest rates, which I can understand. You need price stability in the market, but there's lots of dangers right now. And one way to help you is to use those inverse funds as a tool to do that. Anyway, wish you all the best, and Raythoven out.